Look around the world and you will see that central banks have done everything they can. They have all dropped interest rates down to historic levels. They have all printed insane amounts of money. And they have acted along with government to provide maximum stimulus measures. Yet, after a decade, the economies of the world are still sluggish and appear to all be slowing down. What's going to happen? You came here for the truth, so let me unveil that for you. Today we're going to look at central banks, we're going to look at currencies, and so much more. Let's begin. This is global-rates.com. It shows us all of the interest rates for these particular countries, what they are currently set to. Whether that is Mexico with 7.5% or Switzerland at minus 0.75%. All central banks manipulate their interest rates. Now, how is that done? Well, if we take the example of the US, currently their interest rates are in a range at a maximum of 1.75%. How this is done is not simply by entering a number into a computer. Many people believe that, but instead, they use something called open market operations. I've done a video about this on my free e-course if you're interested. Also talked about it in my second book. Open market operations are essentially printing money. That's how they are able to push interest rates down. And when you look around the world, take a look at this list. Historically, despite the fact that some are quite high, some are very low, these are all near record lows. Some of them are at record lows. And so, we have to understand that if we are pushed into a crisis in the near future, many people believe that central banks will simply act accordingly and they will bring interest rates down. Well, that would push many countries into the negative territory, first of all. But how do they get it down? That's right, by printing money. And the general public doesn't understand that. Those in the financial industry actually do not understand this either. I can tell you that from experience. And it is very important to know how they can get this interest rate to move further down. Printing money is unavoidable in this case. Printing money creates these inflationary pressures on food, energy, and everything else. It's not a good thing to see it happening. So looking at these central bank interest rates, understand what we are facing at some point, whenever that is. Could be a year, it could be 10 years, whatever. Understand how the central banks have to react. Okay, it's important. A lot of people just simply deny it, which is weird, but take a look at these rates, understand what they're about to do and how that will affect you as an individual, how that affects the markets, of course. Now, taking a look at Canada, the economy has been absolutely terrible. The only thing that is keeping it going has been real estate. And you look around, the real estate market has now taken a nosedive in Canada. And I will do a video about that shortly. Growing optimism that a preliminary NAFTA deal is within reach hasn't spilled over into the expectations for faster Bank of Canada interest rate hikes, particularly with rising US-China tension roiling global markets. They're claiming there's about a 20% chance of a rate increase on April 18th. And that's actually down from 40% 2 weeks ago because they're seeing the actual real economy decline. In this article, they basically said that it slipped just barely under zero. They were expecting it to be barely above. It's barely below. And these numbers, of course, are manipulated. They're fraudulent. We know that. So where the real number is, I'm not sure. But of course, at least they admitted yet again, this is the multiple times this has occurred in Canada since the financial crisis, where the economy has slowed down. because you're only looking at, essentially at this time, real estate being the number one driving force. All the commodities are involved in that, of course, but real estate in general. It employs a lot of people in Canada, and they really ultimately can't afford real estate prices to go down. But that's the way that they're heading. And interest rates increasing is going to put heavy pressure on that. Taking a look at this, Canada's gross domestic product unexpectedly shrank in January as the economy faces a broad slowdown after surging last year. Not true. Gross domestic product contracted 0.1% during the month. All right, now I want to look at this. The value of our dollars over time, of course, are less and less because central banks print money. That's their policy. It actually said, Bernanke, if I'm not mistaken, he said it is in the interest of central banks to create inflation because that erodes our debt. And I hope that was Bernanke. If not, it was Greenspan. But either way, the Federal Reserve told the truth, believe it or not. Now, at the same time, our living wages, working wages, they're not able to keep up with all of the inflationary pressures. You know, it's funny. Yes, today people are earning more than they were 40, 50 years ago. For sure. However, we are paying a hell of a lot more for goods and our services. And it doesn't correspond. Take a look at this. Employed full-time, median usual weekly real earnings, wage and salary workers, 16 and over. $10 a week gain in 38 years. Doesn't sound real good. Now looking at this, a gargantuan $4 a week increase since 2000. So that's interesting to note that as time goes on, we are basically getting less and less. Looking at all of this, it's going to be a complete short squeeze every time around. Less and less and less. And in the next bubbles, you'll see it getting smaller and smaller and smaller. It's just going to be a little blip on the screen. And that's the way it is. They created it like this on purpose because they want to make sure that they push people into poverty. That is the goal. Because, of course, the more people in poverty, the more dependent people are. At this time, I've covered it here before, we're at a record RSI. And I just want to quickly flip ahead to show you what that is. Relative Strength Index. The Relative Strength Index is a momentum indicator developed by this analyst. It compares the magnitude of recent gains and losses over a specified time period to measure speed and change of price movements of a security. All right. So being at this rate is not a good sign. The fact that it has gone over significantly now, I mean, just look at it. Compare that to even during the financial crisis, and you will see that we have something to worry about. Then you look here, this dramatic rise, of course, mirroring what we had seen during this central bank easing policies. All right? That's the Dow Jones right here. It's going at levels, I mean, it's ridiculous right now to see where it has come from. I mean, you've seen it fighting up and down, but just to see it going through 2017 was absolutely historic, to say the least, with all of that easy money floating around. Now, LIBOR OIS, if you look here, taking it from basically November timeframe, it has absolutely shot through the roof. It hasn't been this high in a very, very long time. Now we know about the LIBOR. LIBOR is an interesting, completely fraudulent indicator to see. They promised they would fix up all of the manipulation, but we know that's not the case. Regardless, LIBOR is connected into $370 trillion worth of assets or investments, however you want to call it. 370 trillion. I just did a video about that. And you can see that the rates are rising and rising and rising. And the cheaper interest rates are, the easier it is to do business, the more likely it is to do business. If they start to rise, they can handle a little bit of it. But if it gets to a certain level, you encounter so many problems along the way. Everything from mortgage rates and all the way down the line. All of these different financial instruments rely on as low as possible of these different rates, whether it's LIBOR or anything else. It's not a good thing to see this happening right now at a time when the market needs to be really getting something to push it forward, but it's not. Looking at the VIX. Now, it's not at the peak that it was a little while ago when we saw all of that heat coming in with this bet that it was the best bet in the world to short volatility. And of course, that changed very, very quickly. We saw what happened. Now, today, the VIX is at about 20, but it has been definitely at least double where it was throughout 2017. And I think it should be a lot higher, but we'll see as time goes on. Usually the indicators lag behind the actual real statistics. And moving over to the world's worst currency at this time. You will see Venezuela today. This is interesting. I don't know how factual it is, but the official rate of inflation in Venezuela right now, you can see this. I believe this is the official stats at 6,000%. It is actually much, much worse than that. Look at this. Looking at the exchange rates between what we have posted officially, and then there are also the private individuals who are able to calculate this. I don't know if it's accurate at all. I think it's moving far too fast. Bloomberg has the Café con Leche index, which I thought was interesting. Actually, a good way to calculate it, taking an individual commodity or something that you would buy regularly to be able to track that. Okay, look at this. Rates from the widely watched DollarToday.com, known for arousing Nicolas Maduro's ire on state TV, have lagged behind other markers that show prices about 30% weaker, while the US-based website posts a rate of 251,000 bolivars per dollar. Dollar Pro has it at 362,000. And this one, e-wallet AirTM, is at 313,000, excuse me. Why do we even calculate these levels anymore? It's worthless. If this was the chart, and at one point, it was here, okay, it's gone. It's gone. It's done. Okay, it's finished. And I don't know what's going to happen here, but I don't think this is going to be a very nice place in the very near future. I mean, it already is terrible, and it is truly unfortunate. I don't say that in... there's no resolution for something this destructive. All right, I just want to show you this very quickly. I don't necessarily agree with the percentages and the levels and everything else, but I just wanted to make note of this. There are people at the top, and these people control the people under them. The people under them control the people under them, and so on, all the way down. And that's called compartmentalization. And it enables people to control just a couple people, yet indirectly control a lot of people. So if you're wondering how maybe a few thousand people around the world could possibly control everything that we say and do and hear and smell and feel, this is how it works. Through the process of compartmentalization. We are overwhelmingly the majority. But we have to go through all of these different channels, whether it is, keeping money in the bank, or we get our media from these major institutions. We have our healthcare from these major institutions. We have all our services through big corporations. We buy products from the big box stores. And everything is all through these laneways. It's not just an open environment where we can see where we want to go, choose where we want to be. Think of it like roads. We can head down this road or that road or this road, but they're all controlled by certain groups. We don't get to decide, to go down in between these two roads. We have to take one road or the other. So I just had to mention this. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. Links are in the description below. Take care.